Hi, it's Oliver from Freeman Publications, and in this video I'm going to be showing you how to use finviz.com to screen for potential stocks that would be good candidates to write covered calls on. And the reason we use Finviz as opposed to other screeners is, number one, it's free. So, especially if you've got a smaller account, you don't want to be paying $25 or $50 a month for a screener when Finviz can get you 80% of the way there for free. So we're just going to go to the screener tab here. And right now you can see we've got 7,602 stocks that are listed here. So what we're going to do is we're going to just narrow it down to stocks that would be good candidates for covered calls. So the first thing we're going to do is we're just going to select optionable here. That just means you can buy or write options on the stock. So that will eliminate any sort of ETFs or indexes that are listed on Finviz. The other thing we want to do, just for the purpose of this video, is we're going to select USA only, because we're focused on the US market, so we just want US stocks. Another thing we're going to do is we're going to filter for stability. Now, obviously, there's no option here for stable versus not stable, but what we can do is we can use stocks that pay dividends as sort of a proxy for stability. So we're going to select over 1%, and what that does is it just acts as a way of saying this stock is relatively stable, because we don't want stocks that have, we don't want stocks that are heavily trending. We don't want stocks that are very volatile. And just by selecting dividend yields, that filters out most of them. Now, at the end of this video, I'll be discussing the steps to take next, because this is not the be-all, end-all. This doesn't mean by any means just write covered calls on everything that comes up, but this is a good proxy for stability. Another good proxy for stability is average volume. So we want stocks with over 500,000 shares traded daily. That just means we can't really be subject to, manipulation from the market. Someone can't come in, put a huge order and just throw the price out. So that's another thing we use for stability. One more thing we're going to do is we want stocks that don't have any major events coming up. And by that I mean anything that could significantly affect the price in the short term, because covered calls themselves they're a short-term option strategy. And what we want to do there is we want to write covered calls between 30 and 45 days to expiry. So unless you're using leaps, which are slightly different, as I'll explain in another video, we're generally looking for 30 to 45 days to expiry. So we don't want any events coming up in that 30 to 45 day period. And that's especially important, if it's earnings season, which we're not quite in earnings season yet, but it's coming up in the next couple of weeks as I'm recording this video. So we don't really want any companies that are going to report earnings during the time we have the covered call outstanding, because that earnings report can significantly affect the price one way or another. And the whole point of the covered call strategy is we just want to collect income when the stock isn't doing anything. So what we use as a proxy for this on Finviz is we like to go to earnings date and we just select previous week. In the paid version, you can select custom dates, and ideally you would have no earnings within the next 30 days. But in the free version, you can't, so we just use previous week instead. And so what we have here is we have 6 stocks now that have reported earnings in the previous week, have a dividend yield of over 1%, so they're relatively stable. Average volume, over 500,000 shares a day. They're based in the US, and you can buy or write options on them. Now we have 6. During earnings season, you'll have a lot more. But because it's not earnings season right now, not many companies reported their earnings in the previous week. But still, you have 6, which is, you know, a good amount to select from. And these are all at least mid-cap companies. The smallest one, Bed Bath & Beyond, has a market cap of just over 2 billion, which puts it just in the mid-cap category, which is 2 billion and above. And, you know, we have some big ones here. We've got Constellation Brands and we've got PepsiCo. So, you know, consumer defensive is a good sector for covered calls because it's not cyclical. We don't really like cyclical stocks because, once again, the whole point of cyclical stocks is they operate in cycles. So they have a good few months or a good few years, and then they have a terrible few months or a few years. But consumer defensive is a very good category because it's relatively stable. So from there, we can just eliminate these 2. And so we have 4 here: Conagra, McCormick, Pepsi, and Constellation Brands. So these 4 would be solid stocks to look at for riding covered calls. To get a little bit more of a better outlook, we want to also check that these aren't trending downwards. Ideally, we'd like stocks that trend upwards, or slightly upwards, I should say. So to do that, we can go into technical on the FinViz tab, and we can just look at, we want to do 50-day simple moving average and see price above the simple moving average for the last 50 days, because that just means they're trending slightly upwards. And more importantly, they're not trending downwards. So there, we've eliminated McCormick, and, you know, we have these 3 now: Conagra, PepsiCo, Constellation Brands, and these would all be really good candidates for covered calls. So the next step, which I will do in another video, will be to just look at the charts for all of these, just to see if there's anything untoward. Run a couple of metrics, which I'll discuss, and then from there we can see whether these are really good candidates that we actually want to write covered calls on, or if we're going to discard them. But just from this video, and just from these simple settings that you can use on the free version of FinViz, you can easily narrow it down. So we've gone from 7,602 to 3. And, you know, we've done that in a few minutes. And it just makes your life a lot easier when you're looking for stocks to write covered calls on. So I hope you enjoyed this video. If you did, you can get some more info down below in the description. We've got some extra videos for you, some simple primers to writing options for income, all of that good stuff. So that's in the link in the description at freemanpublications.com/bonus. Hope you enjoyed this video. If you did, give it a like, thumbs up, and yeah, I'll see you in the next one.